Yo, crypto crew! Welcome back to Zacchy Crypto Update, your daily dose of the latest and most critical news in the crypto space. Hit that subscribe button and the notification bell so you never miss a beat. We cut through the noise and give you the info you need straight up. We've got breaking news that's just dropped and it's sending ripples through the market. The USSC has just delayed its decision on Grayscale's spot Avalanche and Cardano ETFs. That's right, after weeks of anticipation, the wait continues. What does this mean for Avax, ADA, and the broader market? We're diving deep into the details, the implications, and what to expect next. Let's get into it. So here's the deal. The SEC was initially expected to make a decision on Grayscale's spot Avalanche and Cardano ETFs by May 29th. However, in a recent release, they confirmed they're pushing that decision back by 45 days, setting a new date of July 13th. Now, the absolute deadline for a final ruling remains the same. October 22, 2025, a full 240-day review period from when the filings were acknowledged. The SEC states they need more time to thoroughly examine the viability of these ETFs. Grayscale filed to convert its Avalanche trust into a spot ETF earlier this year, and the SEC acknowledged the Cardano spot ETF filing back in February. This delay mirrors what we've seen with other crypto ETFs, including Bitcoin and Ethereum, which also faced multiple postponements before approval. Unsurprisingly, this news hasn't been well received by the market. Both ADA and Avax have taken a hit since the announcement. Cardano, ADA, is down nearly 4% in the last 24 hours, currently trading around 73 cents. Daily transaction volume is also down 14% despite some positive activity earlier in May. Avalanche, Avax, isn't faring much better with a 2.52% price drop in the same time frame. Daily transaction volumes have plummeted by almost 20%. This shows the immediate impact of regulatory uncertainty on investor sentiment. From a technical perspective, we're seeing increased selling pressure on both charts. For ADA, watch the 70 cents level closely. A sustained break below that could lead to further downside. On the upside, 75 cents is the immediate resistance to break for any bullish momentum. For Avax, the key support is around $35. If that breaks, we could see a test of lower levels. Resistance sits around $37.50. Volume will be crucial to watch for confirmation of any trend reversals. Why is the SEC doing this? Well, delays have become a pattern. We saw it with Bitcoin and Ethereum spot ETFs and now with Avax and ADA. The SEC typically cites the need for thorough due diligence and investor protection. They want to ensure the market is mature enough and that there are no risks of manipulation. However, some argue that these delays are a tactic to slow down the adoption of crypto ETFs. The SEC is opening the floor for public comments on these ETF amendment filings. This is a standard procedure, but it adds another layer of uncertainty and extends the timeline. Remember, the SEC also recently delayed CoinShares Spot XRP ETF, further fueling concerns about their approach to crypto ETFs. The good news is that despite these delays, the Bitcoin and Ethereum ETFs were eventually approved. So there's still hope that Avax and ADA ETFs will follow suit even if it takes longer than expected. So, what's next? The market is now in a waiting game. We have a new decision date of July 13th, but even that's not a guarantee. The SEC could delay again, although the maximum review period is 240 days. Investor sentiment is definitely dampened. The initial excitement around potential ETF approvals has cooled off, leading to the price drops we've seen. However, it's crucial to remember that this is a marathon, not a sprint. Long-term, the fundamentals of ADA and Avax remain strong. If the ETFs are eventually approved, it would open the floodgates for institutional investment, potentially driving significant price appreciation. But until then, expect continued volatility and uncertainty. Don't panic sell. If you're a long-term holder, this delay shouldn't change your fundamental outlook. ADA and Avax are both solid projects with strong technology and growing ecosystems. If you're trading, be cautious. Expect continued volatility and trade within your risk tolerance. Consider using stop-loss orders to protect your capital. Dollar cost averaging, DCA, can be a good strategy to accumulate over time, regardless of short-term price fluctuations. Keep an eye on any further news from the SEC and any developments in the Cardano and Avalanche ecosystems. These will be key drivers in the coming months. Please remember the cryptocurrency market is highly volatile and speculative. Investing in cryptocurrencies carries a high level of risk, and you could lose some or all of your invested capital. This video and its content are for informational and educational purposes only and do not constitute financial advice. Always consult with a qualified financial professional before making any investment decisions. That's the breakdown of the SEC's delay on the Avax and ADA ETFs. A setback, yes, but not the end of the road. Stay informed, stay patient, and stay strategic. If you found this video helpful, smash that like button. What are your thoughts on this delay? Are you still bullish on Avax and ADA long term? Let me know in the comments below. Don't forget to subscribe and hit that notification bell for daily crypto updates. Until next time, stay safe, stay profitable, and I'll catch you in the next one.